Hey guys, Crypto here with a new market update. This video is primarily going to be focused on Bitcoin. We're going to talk about probably Ethereum a little bit, but that's it for this video, mainly because the direction that Bitcoin heads here, again, depending on what happens on Bitcoin, we're going to see alts react based on that. And there's a few different options here for Bitcoin. I'm not super confident in a specific course of action from where we are on Bitcoin right now. And for that reason, I feel like it doesn't make much sense to cover alts, because if I'm wrong about the direction Bitcoin's headed, then I'll probably be wrong about the direction alts are headed. So for now, we're going to focus on Bitcoin and talk about both bullish and bearish scenarios here. Again, kind of in a situation where sometimes I'm super confident about where we're headed. Again, on the high time frames, I'm very confident about where we're headed, of course. Let's make no mistake about that, and that has been the case for months now. But in the lower time frames, I can see a few different ways that this pans out. And sometimes I'm very confident, sometimes I'm not so sure. This is one of those situations where I'm really not so sure because I can see a lot of possibilities. And of course, as price action develops, we get more clarity and can kind of narrow down those possibilities to something that we think is a lot more likely to happen. But for now, let's talk about the different options that we have here on the table. I'm going to talk to you guys about wave structure. I'm going to talk to you guys about data that supports different arguments, and we'll take a look at Ethereum as well. So guys, let's go ahead and just start off with kind of an update from where we were last. So this is one of the recent charts I shared on Twitter, and basically this was back when we were trading at 67.2K, just a little bit under where we are currently trading. And up until this point, I said there's an argument to be made here that we do have impulsive structure off of our lows. Again, keep in mind from my last major YouTube update, we talked about how after breaking 60K, we invalidated that lower time frame impulse, and we're now looking for another impulsive structure off the lows to indicate that our next fifth leg up to 100K plus has begun. And again, what we're looking for is a series of 5 waves to the upside in an impulsive manner. Until we get those 5 waves, we don't really have confirmation that the next move up has started. So that's constantly what we're looking for here, is a 5-wave segment to complete and indicate that the next leg up has started. And so I showed that we can make an argument that off of these lows, we potentially have a 5-wave move forming. This move off the lows wasn't very clean. This was a nice, obviously corrective move here. This move that I've circled in blue, I circled it because the subwave structure here is very sharp, very clean, and I pointed this out in some of my tweets as well. So this is probably a very clear 5-wave segment that we have here, and you can either argue this was the start of a larger 5-wave move to the upside, or you can argue it was the third wave of a 5-wave move that started off of our lows here at 53K. In any case, whether it's the third wave or whether it's the first wave, we don't yet have 5 waves complete. So we continue to look for developing price action to indicate that we have a completed 5-wave move here. Now, this is the idea that I shared, that this fifth wave could still be forming here as long as we don't breach 63.2K, which is local invalidation. And so if we're still working on that fifth wave, we could kind of climb significantly higher before getting a completed 5-wave move to the upside. And I also said, of course, in this tweet that whether this is the start of our final fifth or not, I've always known, as I've said countless times, that this next leg up would be explosive and incredibly aggressive when it does begin. So the type of PA depicted below right here should not come as a surprise if we get it. In other words, while this may look like a relatively controlled start, again, it can get aggressive very, very quickly if this is the beginning of our move to 100K plus. Remember, just for some more context, if we zoom out a little bit, the last major move to the upside, this last third wave, we moved up from 38,000 to 74,000, about a $35,000 move in a month and a half. And as I've said many times now, the next leg up will be even more aggressive than that. So in a month and a half, we could be up off of these lows 40,000 plus, just to give you guys some context. The low that we have right now is put in July 5th. It's currently July 26th. It's been about 20 days or so, meaning if this is the start of the next leg to the upside, it's been 20 days and we've already moved up $20,000, right? So in the next, again, a month and a half is 45 days. In another 25 days, we can move up another 20K. That puts us at 87. That puts us at another 20K, puts us at about 80, high 80s to low 90s within another 20 days, which puts us before the end of August, in the high 80s to low 90s before the end of August. Again, that's assuming that the next leg up has started. But again, that's just to kind of give you guys an idea of how quickly things can escalate here. And again, that makes sense. Again, I said pace of faster than this pace. It's only been 20 days. It's been half of this, and we've already moved up 20x, more than half of this move. So that should just kind of reinforce the idea that what I'm saying is that don't be fooled by the chop right now, because when we start moving up, we're going to hit 100K a lot faster than most people realize. Again, a lot of people still asking me, do you still think that, we could hit the end of this cycle by October? And again, that's the point that I'm trying to make. If we're already at 80 to 90K before the end of August, we still have September, October, 2 more months. And again, if we're climbing at the rate of 40,000 in a month and a half, then we could be at 150K by October. So don't underestimate how quickly this can escalate, okay? With that being said, it's also important to consider that maybe this is not, the fifth leg up has not yet started, right? We're technically still, as I pointed out in one recent update, we're technically still making lower highs. We had a high here, we had a lower high, we had a lower high, a lower high. This is technically still a lower high. And there's some context with the other alts that has made me a bit cautious here, and we'll talk about that here in a second. But yeah, Bitcoin thus far looks pretty good, okay? It looks pretty good off the lows. Initially, I said that there's an argument to be made, and in a tweet here I talked about it. There's an argument to be made that we're going to see a deviation here at the highs, that we're going to get one more lower low into weekly demand, while Ethereum makes a lower low into high time frame demand. And this is Bitcoin's high time frame demand here at around $48,000. And I said this is probably going to get front run. So basically the idea that I was saying is that we expect Bitcoin to show more strength than Ethereum at these levels, because we know what's coming next for Bitcoin is another impulsive move. Whereas on Ethereum, we don't quite have that impulsive price action yet. You can even actually just see, based on the leg on Bitcoin off of 37K up to 70K, very clear 5-wave subdivision, very clear impulsive trending price action. On Ethereum, we kind of got more of a sluggish grind up without clear subdivisions. That just goes to show how much stronger Bitcoin is right now in its current phase. And again, why I've said that the Ethereum Bitcoin pairing is further to fall. But the point I was making here was that I was very confident that Ethereum is probably going to see this high time frame demand zone between 22 to 2800. Why? Because we have triple untapped lows here. We have a lack of impulsive price action to the upside. This looks like a liquidity grab, kind of dragged up by Bitcoin's aggression to the upside. And so very, very confident that Ethereum would see sub 3,000 one more time before this correction is over. If we got such a pullback, the only way that pullback would happen is if we got a correction on Bitcoin as well. So there's an argument to be made that Bitcoin could also see, one more lower low, but a higher low above high time frame demand, while Ethereum sees a lower low into high time frame demand. So after this chart that I shared, we then posted an update to this idea. And that was this chart here. And this update was to show that Bitcoin made one more higher high. Again, still could potentially be a deviation, but Ethereum actually nuked, almost melted down to, we're already halfway down to our downside target. So we're seeing here once again, emphasis that Bitcoin is acting very strong against not just Ethereum, but most alts at the moment. This is again a sign of things to come. This is the writing on the wall, guys, that the next big move up, whether it has started or not, is going to be explosive. And again, like I said, I was much more confident in Ethereum hitting this high time frame demand and making a lower low than I was in Bitcoin making a lower low, because Bitcoin was showing potentially impulsive price action off the lows. Ethereum was not, right? So it was much more likely that Ethereum was in a range here, and a little bit less likely there's a possibility that Bitcoin had begun the next impulse, as we've been talking about, right? So now that Ethereum has fallen 50% down to our target and Bitcoin is still consolidating above our range highs, this is a very bullish sign. And this makes me lean more towards the idea that Bitcoin may have put in our bottom here at 51K, and this really may be the first impulse of 5 of our major fifth leg to the upside to take us above 100K. And now Ethereum has not yet hit my downside target. So to be clear, I do think that Ethereum is still going to hit this downside target, which means that I do think that Bitcoin could see a correction here. Again, doesn't need to be a lower low at this point. It just needs to be enough to get Ethereum down to this high time frame target. So to put it frankly, or to put it simply, by the time Ethereum hits this downside target, wherever Bitcoin is, I will assume that we're very close to a bottom, or that the bottom is in. So if Ethereum hits this high time frame demand and Bitcoin is still floating, maybe at the mid-range, I think that's a good level to look at. But if Bitcoin is still floating above weekly demand here and putting in a higher low, then I think it's very likely that our bottom is likely in on Ethereum in this range, and our bottom is likely in on Bitcoin, putting in a higher low versus a lower low. Again, further emphasizing the idea that Bitcoin is starting a trending move and Ethereum is still kind of chopping about here. So with that being said, guys, let's take a look at some of the data. Actually, we'll go take a look at the Bitcoin chart again and then jump into some of the data after that. So this is the Bitcoin chart, and now that we've talked about kind of the high time frame idea that Bitcoin may have put in a low here, this may be simply a higher low in progress here with Ethereum making a lower low. Let's take a look at potential downside targets if Bitcoin is to correct here and make a higher low. So first off, let's talk about this low time frame wave structure. Again, recall this chart that I shared earlier. The idea was that as long as Bitcoin holds the green zone, we may not be finished with this impulse to the upside. Let's go ahead and take a look at how that has developed. So again, the green zone was this zone right here. And you can see here that we just barely avoided breaking it. Okay, so technically we're still holding this lower time frame structure. We've seen what looks to be another impulsive move to the upside here. Initially, guys, the way that I was labeling this move was as such. Again, this was a very clear impulsive price action. I can break down the lower time frame subwaves, but I already did that on Twitter, so I won't do it again. But basically, the way that I was counting the move there was, again, 1, we have a nice running flat wave 2, a very clear wave 3, running flat wave 4, and a 5th wave here. So actually this should be like that, okay? Based on this idea, we have a completed 5-wave move to the upside, and we get confirmation of that basically on a 3-legged corrective move or a corrective structure that ideally breaks this level, because once this level is broken, it confirms that this leg up is complete, and so that would solidify the idea that we've completed a 5-wave move. Until this leg is broken, it indicates that this 5th may not yet be in. Again, if that was the case, though, we would have expected to have seen kind of a more aggressive climb here, like this, for the final 5th. But we haven't got that. You can see that instead we had this kind of drawn out choppy correction, almost fully retraced this, and is now impulsing up again. I'll explain to you guys in a second what the implications are for such a move. But yeah, this is what we would have expected if we were getting like an extended 5th here to wrap up this wave. We didn't quite get that. So what I think is more likely now in terms of structure is instead of this being a completed 4th wave, it's it's possible that this 4th wave was just a more complex W, X, Y. In other words, just a larger flat correction that would look something like this. Let me go ahead and we'll mark this off. Okay, so now you have a larger flat correction, and this was a 3-legged move, right? A 3-legged move, and then you could argue that this was a ending diagonal or a 5-legged move, so a 3-3-5 flat, or this could be a 3-3-3, what we call a complex correction. In any case, we could have just finished our 4th wave here, and you can see the proportions are also nice, right? When we had our 4th wave being just this little structure, it was a lot smaller than this wave 2, and this is proportionality, looks a lot nicer here. So I think this is probably likely, which means that we could be working on that final 5th wave now, okay, as such. And if this is the case, then this leg to the upside that we're seeing here should clear these highs at the bare minimum. So we'd expect a break back above these highs. And then this 5th leg, it's hard to know how big it can get, because it can either just be a 5th leg that is about the size of this first, in which case we clear these highs and that's the end of this move, or it could be, again, an extended 5th wave, similar to what we were looking for here, right? We were looking for, if this was an extended 5th wave, we were looking for something like this, right? An extension. So if that didn't pan out, right? So if that's the case and we're getting that now, then we could see that here as such, okay? So those are this is the most bullish possibility that you can come up with at this point, that we are an impulsive structure and we still have the final 5th leg of this first major impulse to go. Again, context, guys, context on the higher time frames, what this is in the context of the higher time frames is, again, this is just the first wave of 5, okay? So hopefully that makes the higher time frame context clear. We're looking for this first wave of a much larger 5-wave move to our cycle top, somewhere above 100K. Some guy commented on my Twitter, 200K by October, you're nuts. I'm not claiming we're going to 200K by October, guys. I drew this squiggle to show you guys the structure in one of my charts, and he was like, hey, 200K, your chart shows 200K. Again, as always, these squiggles are not necessarily drawn to scale. I've previously talked about my targets being around 150K plus or minus by the end of the cycle, so don't take the squiggles that I draw without even looking at where they're landing up here as take them with a grain of salt whenever I'm drawing these aggressive squiggles. Like even this squiggle here from my 5th, I'm just trying to show you guys the wave structure. I don't know if the 5th is going to end at $78,062. Okay, hopefully that's clear to everyone, but some people don't seem to quite get that. So in any case, guys, this is the kind of the most bullish scenario where we are still working on the fifth and it's not yet done, and we're just going to keep choppily climbing up without breaking any key lows and completing a final fifth wave here, after which point we'll get a little bit of a more drawn out correction. And again, that correction, when I say drawn out, it's really should not be that bad, right? It could be more aggressive, but you'd expect more of like a sideways consolidation before, again, the next five wave leg move to the upside. Again, this move to the upside in totality is going to be a lot more aggressive than anything we've seen. So these corrections, don't expect them to be deep 70 to 80% corrections. They're likely going to be sideways corrections, because again, for the most aggressive moves, you're going to get shallow corrections and aggressive rises, right? So this is the most bullish case. I'll talk to you guys about some things to be of here as well. And let's talk about kind of a little bit more of the not so aggressively bullish cases here that are also possible, right? So again, and then I'll talk about why I think one or the other is more likely, of course, right? I'm not just here to show you guys all the possibilities. I'm here to show you guys what I think are realistic possibilities, and then I'm here to tell you guys why I think some are more likely than others, or I want to show you guys the logic and the data or the arguments for each one so that you guys can make informed decisions. So let's go ahead and break this down. So again, this is the most kind of aggressive scenario where we're forming a fifth leg, but we have the first to fifth, and we're going to get an extended fifth here above probably 73K plus, right? A little more tame of an idea, so a little less aggressively bullish idea is that we're wrapping up the fifth here, and we're just going to get a marginal higher high to complete the fifth here. Then we're going to see, a little bit of a deeper correction for the subwave 2, okay, something like this, and then we're going to get the third wave to the upside, okay, so something like that. This is actually, I would have to say, probably my favored scenario here, and I'll explain to you guys why in a second, but it has to do with context on alts right now. This to me would probably be ideal, would make the most sense, and let's go ahead and break down why, okay? Again, I talked about how Ethereum, as previously shared, I'm looking for the $2,200 to $2,800 region. Actually, let me just pull it up here. Okay, so this is Ethereum. And again, I've talked about how, to me, Ethereum makes the most sense clearing up these lows into demand and then kind of shooting up from here to new all-time highs. You can see Ethereum's halfway there, right? We need something that's going to get us to the bottom or take us another 50% down. Ethereum dropped from its local highs down to halfway down to the range on the Bitcoin move from 68,000 down to 63,000. Okay, a $5,000 move on Bitcoin was enough to bring Ethereum halfway down to its range. Let me go ahead and actually adjust my cursor settings here, because I know we get a lot of requests for that. Hopefully this makes my my cursor more visible, okay? Let me know if you guys like this or if it's distracting or whatever, but hopefully now you can see where I'm pointing. I know I get a lot of requests for that. So in any case, where was I at? Yeah, so I like this scenario because essentially what this does is if Ethereum dropped 50% to its target with this drop on Bitcoin here, that it essentially made a higher low, then another drop, a similar drop of that magnitude, even just down to 59, 60, 61K would be plenty to get us to these range lows and to this target on Ethereum. And again, as I mentioned, when Ethereum hits this target, I think that's probably the bottom on Ethereum. It's probably likely also the bottom on Bitcoin. And so again, this scenario where we make a marginal higher high here and then come back down for one more leg to the downside, again, making a higher low on Bitcoin, maybe hitting the mid-range, that's a nice region around 60K-ish, plus or minus a couple thousand. That would be enough to get Ethereum to its range lows, to its target zone, and then we see continuation on Bitcoin up as it leads the charge to make new all-time highs and head to that 100K plus. That sort of a move is sufficient to get Ethereum down here. A lot of other alt targets will be hit as well, and then everything will reverse back to the upside. So I really like this scenario versus the scenario where we have that kind of extended fifth, where we just keep pushing up. It's possible then, of course, that Ethereum keeps grinding up and doesn't quite hit this region, or even that maybe we get this extended fifth and then get a correction, and so maybe Ethereum grinds up and then gets a deeper correction when Bitcoin hits that top. But in any case, no matter where we go from here, I still think whether we go for that extended fifth or whether we go for a pullback shortly after taking these highs, I think the next leg down on Bitcoin, the next correction on Bitcoin, is what is going to get Ethereum to our target. And at that point, wherever Bitcoin is, I will assume really will likely be our lows on Bitcoin as well. So either of these scenarios are technically possible. I favor this one a little bit more with Bitcoin correcting sooner rather than later. Also because you can view this through the lens of like impulsive and corrective price action, but at the end of the day, what you have here for the last few months has been a very tight consolidation, and typically we get, the tighter this consolidation gets, the more aggressive the explosion once you break out of it gets. If we were to make this sort of a structure where we make a marginal higher high here, we make an overall lower high here, come back down again to kind of mid 60Ks, and then erupt, what you essentially have here is a further tightening of this consolidation structure, a further tightening of this wedge-like structure. And that, I think, again, the lower the volatility gets before the explosion, the more aggressive this leg up is going to be. That, to me, gives us a little bit more consolidation here within this range before we explode to the upside. And I kind of prefer that over an immediate break of this range and then, a pullback and then a breakout. I prefer this tightening of consolidation and then an absolute massive green candle to the upside that shocks everyone, right? So that is what I'm looking at here on Bitcoin as well. And let's talk about some of the data that we're seeing that kind of supports what I have now called kind of like my preferred scenario. Again, that's making a marginal higher high and then correcting for the subwave 2 before the mega 3 starts. Let's take a look at our heat maps. And again, I've been sharing charts on this quite a bit lately. Back on Twitter, we had this situation where we had these stacked asks and stacked bids kind of capping price inside this range for a while. And that price signature of those stacked bids and asks has kind of disappeared now. It was present here. It's kind of gone away. We do have quite a bit. This is, again, Binance Spot. So we do have a significant amount of asks available right above price here. We have some bids forming right below price here with a lot more down here below 63K. You can see here, you can look at the order book depth here on the right, and you can see that the books are definitely thicker to the upside right now than they are to the downside. Again, if I'm moving my cursor down to this level here, you can see that this shows us the total amount of bids down to 65.5K. And guys, I'm going to make a tutorial on Trading Light, which is this heat map system, soon. So if you're having trouble understanding what I'm showing you guys here, look out for that tutorial. It'll explain everything in a little bit more depth. But again, I'm showing here that if I move my cursor down to this level here, it shows 3.7% below current price. We have 522 Bitcoin of bids stacked. And that's 3.7%. If we go to the above us, 3.7% away from Bitcoin price to the upside, we have 1.6 thousand Bitcoin worth of asks stacked. So essentially what that's showing you is that there's 3 times as many sell orders above price as there are buy orders below price within a 3.7% range. In other words, there's a lot more sell orders above price than there are bids below price at this very moment, okay? That means that it's going to take more buy pressure to move up, and it'll take less sell pressure to move down. This generally means that there's a lot of resistance above relative to support below price at this time, and that's where we got all these local tops, where we had the book stacked more heavily on the sell side than on the bid side. And each of those, you can see we tried pushing up into those asks, we got rejected and came back down into the bids, pushed up into the asks, rejected, came down into the bids, pushed up, rejected, et cetera, et cetera. So this is telling us that it's going to take a decent amount of buy pressure to push through this at this moment, which is, again, supporting the idea that we may be making a marginal higher high here and then coming for a pullback, because there's a lot of sell orders stacked between 68.6K and our highs at 74K. Okay. The other thing that I'm seeing that makes me think we may be more likely to get a marginal higher high here and then a pullback, we can take a look at Velo Data. Okay. And I want to point out what we're seeing here on our CVD. Okay. So those of you, again, who follow me on Twitter may remember that I've been tracking Binance and Coinbase Spot throughout this entire rise off of our lows. Again, our lows are here at 53K. And I pointed out on Twitter as well, if I'm not mistaken, that following this correction, okay, if I make a horizontal line here at the bottom of this correction, what we can see here on CVD is that this is currently a Binance Spot CVD. You can see that since this correction, price has moved up quite a bit, but Binance CVD has actually been Spot CVD has literally been actually flat. I'm going to go ahead and hide these so we can focus on the CVDs right now. Binance Spot CVD has been flat. What does that mean? That means that this move up was not driven by Binance spot buyers, spot market buyers. They did not play much of a role in this move because they were not actively net buying, right? In fact, you can actually see here that they started net selling at the highs. We'll get to that here in a second. What we can see is that there was a rise, however, in perp buying. Okay, so this move to the upside, there was definitely perp participation, and perp again is leveraged players, leveraged long participation on this move up, but there was not spot participation on Binance's part. Now, if I switch this from Binance to Coinbase, what do we see? That as soon as this low was put in, Coinbase buyers were buying, and they were buying aggressively, right? And I pointed this out as well, that this move is primarily driven not by Binance spot buyers, but by Coinbase spot buyers as well as perp buyers. However, we can see here that Coinbase spot buyers stopped buying as well. And where did they stop? Let's go ahead and mark that off. The peak of Coinbase buy pressure was here at this local high. And you can see since then, they've actually been selling into the rise, okay? So we had Coinbase and perp buyers lifting price off of these lows up to this area, which again, zooming out a little bit, is where we've rejected from with a series of lower highs. And as we pushed into this zone, they stopped buying aggressively and are now net sellers. You can actually from these local highs. So we can also see that that kind of coincides with this local top here, the shift of net buying to net selling on both perp and spot CVDs here. Okay, so we had a shift in participation here at the highs. We have now begun net selling off, and you can see that price initially corrected as well, along with this net sell off, has now bounced up to the upside. However, even on this bounce to the upside, I'm going to go ahead and mark off where that bounce started. What do we see? We see that there was again perp participation. So there was from this point to this point net market buying on perps. So that's a sign that perp players are helping push this price up. However, what do we see here? Net market selling on spot, right? Again, this is Coinbase spot, and I can actually go to Binance as well, and you can see Binance has been relatively flat, but again, Coinbase leading the charge, and once again, net selling into this rise. So whenever we see perps kind of pushing with spot selling, that's not what we want to see. That's not technically a good sign. That means it looks like spot buyers were interested all the way up to these levels, and now they're more interested in selling here than buying. And again, we know that spot typically drives moves to the upside, at least healthy moves to the upside that are likely to result in continuation. So we don't like to see this shift going on here. Now you'll also notice that open interest between these periods, right? From here to here has been declining. However, from here to here, we got an initial drop in open interest on this pop, as you can see. And that again is with market buying on perps. So this is likely shorts being squeezed as price grinds up. And then we've seen a rise on open interest at the highs, okay? And again, that's coming with a kind of a small, very small rise here in perp CVD and a decline in spot CVD. So essentially what we're seeing here is short squeezing to the upside here as spots selling into the squeeze. And then we have a rise in open interest here as we're getting positioning once again of perp players, buyers and sellers, as spot continues to sell off. So this is not the ideal type of signature we want to see at this particular moment where we're pushing into these highs, which is again why I think it makes more sense that we get a marginal higher high here, reject as spot continues to sell off to push us back down, and then find support somewhere in this region here. Probably, I like, again, if Bitcoin's going to make a higher low, then a marginal lower low below these lows at 63K, push into this kind of gap into this area of demand to potentially form a higher low here. And then again, we'd like to see, if all goes well, we'd like to see once again a shift in participation here with spot once again kind of buying in this region, absorbing sell pressure here and lifting price up once again. Okay, that's what we're looking for if we get this sort of price action. If we get spot participation in this region, and again, if Ethereum has already hit its lower low in this region while Bitcoin's making a higher low, then that's a good sign that Bitcoin's not going to visit these lows itself, and it's likely we're going to look for signs that we're putting in a base here for the next leg to the upside. So that is what I am looking for here on Bitcoin. I've explained to you guys, using the data that we have, the logic as to why I think that this scenario is a little bit more likely than this scenario. Okay. Again, things can change all the time. And if we see data that supports this scenario that I'm going to change to green as the most aggressive scenario, if we see that data supported here, then my bias could change. But for now, the data seems to point towards us getting a rejection here and likely a little bit of a correction as spot continues to sell off. And then we look for, again, a higher low and a continuation to the upside. So that is it for this update, guys. I hope you guys enjoyed it. If you did, please like, share.